Good morning and welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts. Major Market Wednesday is what we're going to go through today as markets are hitting all-time highs. It's not really as exciting as it all sounds, according to the media. Yesterday, the markets did bounce right off the 20-day moving average. Not surprising here. Markets still on a very solid buy signal. That buy signal now getting up to more extended levels as money flows are declining. So again, pay attention to those declining money flows. Last time we had a sell signal with declining money flows, we did have this correction here. So again, not surprising here that markets are doing what they're doing at the moment. Buy signals are positive, money flows are positive. MACD is still on a buy signal, but that MACD, the moving average convergence divergence, getting very close to flipping back over to a sell. Again, not surprising here. Money flows are positive, buy signals are positive here, but pay attention to the MACD because again, this MACD signal, the moving average convergence divergence signal, very close to triggering a sell signal here. As we've seen before, this does align with market corrections. So again, not always immediate, but these actually wind up leading to bigger corrections down the road when you get these MACD crossovers. So again, we've got a lot of signals kind of starting to line up here that suggests that markets are going to be contained to recent peaks. We're not likely to make a lot of gain here, and there is risk at this point down to at least the 50-day moving average. Again, one of the big things that has been a strong hold of this market ever since really November of last year has been this 50-day moving average line. We haven't violated the 50-day moving average in quite some time, which suggests at some point here we are going to have a deeper correction back to the 200-day moving average, which will be around 11% at this point. So again, not outside the realm of normality. Again, a 10% correction, certainly within the context of any normal year correction, but it's going to feel a whole lot worse than it is because it's been such a long time here with no volatility. But let's get to some of the other markets as well. Jumping over the NASDAQ, we see much of the very same story here. Markets kind of holding just below their recent highs, bouncing off the 20-day moving average yesterday. Very similar to what we saw in the S&P. Not surprising here because of a lot of the same stocks driving both markets, Apple, Microsoft, etc. Again, very deviated from the 200-day moving average. Money flows are positive, but also seeing that money flow volume beginning to actually decline here a bit, just like with the S&P. And again, a MACD sell signal actually already in place with the NASDAQ. So again, likely we're going to see this upside contained in the NASDAQ, and there is risk of a deeper correction here back to the 50-day moving average, which hasn't really happened here until we go back to April of this year. So again, even a correction back to the 50-day moving average at this point in the NASDAQ is going to feel pretty painful here. And again, something that we might see here over the course of the next couple of months. Jumping out to international and emerging markets as well. Start with emerging markets because again, money flow buy signals here as well. Emerging markets have come up here a bit, but running into a lot of overhead resistance. This has been a very poor place to have capital allocated, particularly this year. Not much performance at all. In fact, not performing well at all has been a real drag on portfolios. So emerging markets really just continue to underperform here. Not a lot of reason at this point to be long emerging markets at this juncture. Same thing for international markets. Again, international markets have had a nice rally here. They did get above the 50 and the 20-day moving average, have burned up a lot of their momentum here, but again, hasn't really done a lot over the last several months. And again, just a point of having capital allocated. This has not been a place that you've wanted to have capital allocated to a great degree because it's been underperforming the major markets here domestically in the U.S. Small caps and mid caps. Let's take a look at some of the smaller action in the markets. Mid caps have not been performing well now for several months. And again, not surprising here. We see the economy begin to weaken. These are the areas kind of most affected by weaker economic growth that's going to impact the earnings. Mid caps very overbought here. Money flow signals very close to triggering a sell. Again, have had some recovery in mid caps. I would definitely take profits out of mid caps and start to move that towards larger cap space for a more defensive play over the next couple of months. Same exact thing we see here with small caps. Again, not really performing well at all. Negative money flows. Money flow signal extremely overbought here. And again, another area I would definitely take profits, reduce small cap, mid cap, move that towards large cap domestic at this time. And that way, at least when we go through a correctionary cycle, small cap, mid cap will really underperform. Large cap, high liquid names, that's where money is flowing to right now for safety and liquidity against a correction. So again, that's Major Market Wednesday. I'm your host, Lance Roberts, for Major Markets and 3 Minutes on Markets and Money. We'll see you tomorrow.